I have on set Belpointe Chief Strategist David Nelson, along with co-founder of Flynn Zito Capital Management, Doug Flynn. Good to see you both. Starting with you, David Nelson, down 200. Why?
I think Sherry hit on a couple of the key points here. Walmart probably set up the negative tone, but even without Walmart's numbers today, we're likely looking for some kind of a pullback. You know, this all started with inflation, with rates moving higher, and coming into the week, we saw the 10-year at around 2.9% again, and that's where it started. But I think if I can take it back to last week, that dramatic rise off the bottom, I think for a lot of investors, this very slight decline we're having here speaks a lot for the market, because I think a lot of investors saw that even though we have some inflation here, there's still a lot of growth and a lot of earnings power out there. Pretty big investment house, BlackRock, came out this morning endorsing that. And I will point out that, sure, there's a lot of things you can do to massage the bottom line of a company on the income statement, tax cuts, all sorts of things. But sales growth, either you got it or you don't. And right now we have it. 50% of U.S. companies in the S&P 500 are actually having a positive sales surprise. So I think there's a mild pullback right now. We probably need it to digest what we did last week.
But, the retail sales numbers have not been looking so good. Doug, you look at what we saw last week on the retail sales front, you look at Walmart coming up short today, and, my hope is this is just a blip, right? And that as we move forward here and people get a little bit more money in their paychecks, they will have more money to spend, and you need to kind of be forward thinking on this. But your take?
True. No, that's true. I think that we haven't really felt the effects of that. The first paycheck just really started most recently, so that hasn't worked its way in. That being said, after you have a year like you did last year, it would be completely normal to have a normal correction, and that is usually around 15 to 16%. We had the official correction of 10. We touched about 12. But we bounced back up, and we had the best week we had in 5 years last week. So I think that it wouldn't be unreasonable to think that we go back down and retest that and maybe hit the normal correction that you have after a year like last year. And then you resume. I think we're still going to get double-digit returns by the end of the year. So this is one of those opportunities that you have. And Walmart is definitely on the lower end of the risk spectrum compared to a lot of other technology companies. So those are the opportunities you're looking for.
Dave Nelson, does any of this factor into what the Fed's going to do? I mean, when they're looking at retail sales numbers and they haven't seen a big uptick yet in what people are spending, will they maybe hold off?
It's not changing any of the dynamic right now. I just came in, I looked at my screen and I see 100% probability of a rate hike, probably for most of the rest of the year. And I think they're trying to get back on a path to normalization. They're stuck between a rock and a hard place. Maybe they'd like to pause a bit here, but they got to reload. So eventually we're going to have, some kind of economic pullback somewhere down the road. They don't have the bullets here. But Doug hit on an important point. A lot of the dynamic we're seeing, the acceleration in the economy, that's not just a Wall Street event anymore. That's translating over to Main Street right now. And I think people are pretty excited about the fact that they're seeing a little bit of a bump in their paycheck. And that's going to pay dividends when we get into the midterms at the end of the year.
So it sounds like you're both pretty optimistic about things right now. Yeah, you are.
I'm paid to worry, but right now I feel pretty good.
You feel pretty good?
I do.
Doug?
I do. I do as well. I mean, you're at 17 times earnings. If you get a 10% correction, you're at 15 times earnings. I mean, what more do you want as far as getting in and getting invested for the long haul? And that's what we're talking about. Not money you need tomorrow, by the way. Money that's long-term.
I can tell you, I'm feeling pretty good, too. I feel really, and you say you get paid to worry. I just worry naturally because, that's one of the things that I do. But I have been very worried at various times about this market, and I don't feel that right now. I look for all these signs that would send us lower. I was calling Lehman long before that whole 2008.
Hard to point to a recession or anything recessionary with numbers like this right now. I think this is, a correction. We get these. We've had 16 corrections since the 70s.
But we can handle corrections. I mean, as long as you're not talking about some kind of systemic crisis that's going to send us towards the path of recession. I mean, that's just not out there.
True.
Right? I mean, the market, volatility is good, and it gives people an opportunity to get in.
But you want to have people who do have a little bit of trepidation, because once it's a party and everybody's back, that's when I get worried. So it's good to be positive, but you do need some people that still don't believe in this market to hold it back from getting too far too fast. Therein lies the opportunity.
Doug makes a very important point. Reversion to the mean is a very powerful force, and we got it. We crashed through the 50-day, the 100-day, and we finally found support around the 200-day moving average. In less than a week, we were above the 50-day again. So, it's not that bad.
Good. I like hearing that. All right, especially when we're down 200. Thanks, guys. Good to see you both.